Hope everybody is doing well, haven't lost your shirt out there. We were one of the only channels to not be entirely bullish on the Fed rate cuts. And so if you've been watching this channel, you know that you needed to prepare for a potential retail bull trap. I called it right here. The thing to understand is really the Fed rate cuts is determining the entire macro conditions. And the problem with the Fed rate cuts is that they actually had the exact opposite effect that they should have. And so the Fed was trying to lower the rates. It wanted to lower the interest payments that it would have to make on the debt. By lowering the rates, they expected mortgage rates to go down as well, which would loosen up the housing market. And they expected that it would increase corporate lending and inject massive capital back into the markets. But the market reaction was actually the exact opposite. I want to show you this chart. I think this chart just explains everything. This is the dollar index. The DXY skyrocketed today. You would have expected this chart to go down, actually, because if we're lowering the rates, then the dollar should weaken. We can take a look at the 30-year treasury here. This is essentially what dictates like mortgage rates, the long-term rates. In this corner, this dip here was when the Fed rate were cut. This rate needed to go down. And as soon as you saw, okay, it's having the opposite effect, the rates are not going down, then that was a signal, which we called here, that this could be a retail bull trap. And as a result, there has been a fleet to safe haven assets, which is why we're seeing gold. Gold is overall doing well. One of the only assets that are kind of flat today. Let's see who the losers are today. ASTER. This is the Ethereum treasury company, down 10% today. ETH that season is basically over. I called the Ethereum top. You can see just on this chart exactly where I called it. I said Perps DEX era marks the end of Ethereum. As we're rotating into Perps, Perps just fundamentally disrupt Ethereum because they're faster, cheaper, better UX, give you the leverage which every trader wants, less contract risk. There's no contracts on the Perps. You just deposit the funds in and then you never have to mess around with contracts ever again because it acts like a centralized exchange. The whole experience is like that. But that cycle, the digital asset treasury cycle, seems to have been played out. And the other effect of the Perps was, and continues to be, that Ethereum-backed liquidity pairs, which typically you see in DEXs, are going to be replaced by stablecoin collateral. So really what you're seeing here, by the way, is all of these alt tokens are backed by the same one thing, Ethereum or Solana. All of their liquidity tends to be backed by that. So if Solana decides to drop like 8% in the past 24 hours, you're going to see all creator capital asset tokens drop by that same amount. They're all correlated to the same thing. So they all move together. This is why if you expect Ethereum season to be done, if you think ETH is gonna die, but then on the other hand, you're out buying a bunch of these other random altcoins, well, they're all paired to Ethereum on the back end. Most of their liquidity is paired to ETH. I don't really like all of these gas ETH L1, L2 tokens. And as Perps roll in, and it looks like Perps is gonna be the next big thing, you might want to just get some Bitcoin. Bitcoin is uncorrelated to any of this stuff. It's the most unique asset. If we take a look here at the overall markets are mixed. So it's not just a crypto thing. A Tesla down 3% today. Tesla is pretty funny because their capital expenditures are so high. And same with Meta, they don't have a product anymore. Meta does not have a product. Tesla does not have a product. They're telling you, can you please bet on our future? We're gonna have this self-driving car and robot Optimus thing, but we don't have it now. Same with Meta, they've got nothing, but they're saying, hey, one day we're gonna have something, just bet on our future. Maybe in 10 years, you'll get a return on capital when you finally see us making money. Same with every AI company. None of the AI models are making money until 2029. And then China comes and they're going to steamroll everybody. Nobody wants you to look at China. What I like to do is, I need to see the product now. I'm not going to wait 5-10 years to make money. I want the money now. I need it today, now. So I'm not going to hang around for a product. Take a look at this tweet I put out, by the way. This explains the dollar index. Alt season is over, rotation to BTC. Market is realizing Fed rate cuts basically do nothing. So the opposite happened, the dollar strengthened as a reaction, and that strong dollar is causing other assets to drop. Mortgage rates, if they continue to stay high, it can cause a housing crisis. And as people realize that the Fed is out of control, I think it could spark market panic. They're like, okay, we're cutting the rates, and the mortgage rates are not going down. What do we do now? And the way this is going to play out, my understanding is As they continue to cut rates, the market's not going to believe that, and they're going to have a knee-jerk opposite reaction, and they're going to demand higher yield from the 30-year treasuries. So those are going to continue going up, and it's going to cause the dollar to strengthen, not weaken. So the dollar continues to strengthen, depressing all other asset prices. But the reality is, it's not a good sign that the dollar is strengthening when everybody knows that they don't believe in the US economy and the solvency of it. We're in debt. We have like $37 trillion worth of debt, and our net interest payments surpass the national defense. So if the interest rates go up too much on the dollar, we can't even pay it off ourselves. So this is the idea of gradually dollar strengthens, and then suddenly it just craters. There's a trigger. The US government may just say, you know what, we're gonna default. Yeah, we're paying you guys really high yield on our treasuries. The dollar's so strong, but we got a default. We're not going to just pay so much interest rate on the dollar. And so hyperinflation, oftentimes in history, it is very quick, you know, within 3 weeks. Didn't the Argentina peso collapse? It's like down 20-30% in a year. I think the US has been backstopping this, right? Besant just recently this week said he's going to come in and backstop this. So all of this Argentina inflation is being exported to the US. But yeah, let's talk about the housing. This article is a good one. It's showing Fannie Mae's prediction of mortgage rates, right? It's telling you we're going to see higher rates in 2026. They're projecting we go up to 6.4% at the end of the year. All the homeowners have been sitting around. There's no liquidity in the housing markets. They're trying to sell their houses. They've been locked into these high rates since, 2022? They're waiting to sell their house. They can't. Nobody can move. And the rates are not coming down when everybody expected it to. So nobody can get mortgages. But you can see just like, for example, this is LA housing market trends. Number of homes sold, it's relatively lower than historically. Number of days on the market, it's been creeping up. It doesn't look good in terms of the market here. What I like to think about is that real estate is the new NFT. OpenSea is like Zillow. They go around telling you, okay, the last house was sold for like this price, or the last NFT was sold for this price, but then you go and try and sell it, and the market is basically dead. It's only a few that may be getting this price. I mean, this is one reason you don't necessarily want real estate. I'm not bullish on real estate, especially with the fertility crisis. And then the greatest wealth transfer where the boomers are all passing their homes down to kids. The kids are going to sell it. People in reality, they want a new house, a new condo, something they can show off on Instagram. You can't show off a decrepit house on Instagram. This October, we will face a government shutdown. The White House has instructed everybody to prepare to fire even more people. We're basically running out of money. But they can always just raise the debt limit if they really wanted to. And we just got to keep printing. Look, Bitcoin's got to come back up. I can't get liquidated here. 109.5. If it keeps going down, I got to go back to making YouTube videos. I got to come out of retirement. It's going to be brutal. But some people are thinking, okay, well, they're going to buy tech stocks. I think if you're to look into it, way too many people own tech stocks. It's kind of a bubble, really. One reason to be bearish actually is because there's increasingly government action against tech stocks. And the landscape is simply not the same as it used to be when these tech companies could just go out, build their products, release it to the whole world, and gain global distribution, and nobody would get in their way. Let's take a look at some government action that happened just today. So the EU is coming into Apple, basically. And they're telling Apple, you have to open up your app ecosystem, basically. You wanted to do AI Siri translation into your headphones. You've locked it to the AirPods. No, you have to make it be able to work with any other device. The EU is cracking open Apple's locked garden ecosystem. So far, just in April, they already slapped on a $500 million euro fine on Apple under the DMA. They're saying like, okay, you have to open up your app store to allow other app stores. Their whole entire walled ecosystem is cracked open by the EU. In addition, Meta is now facing EU charges for failing to police illegal posts. Right, this happened just today as well. And then you've got Google also facing a second EU antitrust fine. So the three top tech companies are all facing EU regulation, and they're going to be fined like billions of dollars, basically. In addition, the FTC, America basically is coming down on Amazon for $2.5 billion in settlements. Amazon used deceptive methods to sign up consumers for Prime, made it difficult to cancel, I think what's happening is when these countries are broke, the EU is broke, government is broke, they're just coming to the last stores of wealth and they're saying, okay, who's got money? Who's got money? Oh, these tech companies got money. That's our piggy bank. Let's crack open the tech companies and just find up some reason to extract funds from them. We'll regulate them. That's what the EU is doing. China and the BRICS nations are just banning them altogether. The US government with Trump, they're putting in all the tariffs. The H-1B 100K visa, what do you think that is? It is wealth extraction from the tech companies, and Trump announced just today he's going to be giving the farmers that 100K visa money or the tariff money. But all of these are ways to just get the tech companies to pay more because they're saying, oh look, these tech companies are making too much money. Why don't we just slap on several $100 million fines or $1 billion fines on them? And who's paying for it? Well, that's you. You're the shareholder. Mark Zuckerberg isn't paying. Don't feel bad for Mark. You're paying. If you own the S&P 500, you're the investor backing all of this. I do sell private courses on techinterviewpro.com. People love to trash on this because they think it's like some online course thing. There are people who buy this, they actually land six-figure jobs. You know, think about it, right? Your interview is 6 hours, one day. If you can take one tidbit of information from here that helps you ace that 6 hours, it's worth it. Think about how much you're throwing into tuition. It's ridiculous. They'll put 100K into their college tuition and then they'll say, I don't want to buy like a little bit of education. Maybe invest in yourself sometimes. It's not the worst thing to invest, especially to learn something from a complete pro. Can you pay in TechLead coin? I think about it. Well, this is the hilarious thing. I would love to accept crypto and Bitcoin on my online courses, but I don't code. I don't do the coding. I use no-code solutions. I use Stripe, PayPal. Get them to integrate support for this. This is one reason I have such a problem with, it's called X402. It's Coinbase. Coinbase is always telling you, hey guys, we released this on-chain kit API thing. It's an open protocol for internet native payments. So just integrate this API for online agent payments using crypto. And they go through the effort of publicizing all of this. And it's like, look, retail doesn't code anymore. Who are you talking to? Nobody here codes. We don't have any blog, app, or website to integrate any sort of crypto payment. Go talk to Stripe. Go make a B2B deal, an enterprise deal with Stripe, PayPal, or Amazon, and you guys integrate that. But barring that, this API is useless. This is why you need to watch distribution. And this is why I'm bearish on Ethereum. If Stripe says they want to use the Tempo L1 blockchain for their stablecoins, that's how it's going to be. Whoever controls Web 2 controls Web 3, arguably, right? That is distribution. In addition to all of the tech backlash, H-1B visa abuse continues to be an issue. And now lawmakers just today announced there's continued probes from the US government to look into what's going on with H-1B. I think the White House announced that they're going to ask Amazon and some of these top tech companies, what are you guys exactly doing with this H-1B thing? Do you guys think I was racist in my last video, by the way, on H-1Bs? I'm dismayed people think I was because I'm not. I'm pretty happy that it is getting the publicity and people are learning about the whole H-1B thing. Even when I was just getting out of college, there were people there who said, okay, they can't get a job. They're going to go become a bartender. And the whole QA team being filled with Indians is just a disgrace. Everybody knows it. I can name any American student who can easily take on this QA job. Why did you have to go overseas to bring in this guy? I can name thousands of people who would love to work at Google. Anything. Any job is okay. QA, fine. Test engineer, technical program manager, whatever. Any footstep into Google and they'll take it. But they don't do it. Same with Meta, same with all of these companies. Maybe I should just become super racist. Yeah. Well, then I would get banned. We're gonna try and be politically correct, guys. I'm a legitimate YouTuber. We're not going off the rails just yet. Especially if Bitcoin goes under 100K. I got to get my job back. Ethereum is down to 38.30. ASTER down 20%. I should have waited to today to buy that one. I still think ASTER is going to be good, actually. Let me tell you what my thought on ASTER is, by the way. Here's my suspicion. Nobody will tell you the tokenomics anymore. If you go to ASTER's website, they're just like, look, just trust us, bro. Same with Avantis. Avantis is just like, it's just some connective issue, bro. And my suspicion is they're basically building in stealth. I think these actually have real utility and value. I mean, it's just my suspicion that the meta may be changing where these aren't necessarily just going to be random tokens they're just going to wipe out, but they may actually be trying to give buybacks and burn and some revenue accrual. Like if you look at Hype is doing a bunch of revenue buybacks. And if that's the meta, if all of these tokens are saying, okay, we need to compete with Hype because Hype is setting the standard for buybacks and revenue fee accrual, then they may under the cover say, okay, we need to do something similar to that. They need to overtake Hype's market cap one way or another if they want to establish that they're going to be the protocol to use. But they can't spell that out for you. They can't just put it all on the documented website and explain all of the tokenomics, because if they were to spell everything out, then people would come after them. It's kind of like how Easy Labs, you've got CZ here, he's the intern because it's plausible deniability. He's the CEO. I mean, come on. But they can't just write that there. They can't just put CEO there. So that's my guess. So this is one possible reason to maybe be bullish on some of these. Get some silver. Look, before crypto, before Bitcoin, I was a gold bug. I looked into gold. I loved gold. Silver as well, looked into it, but silver is not scarce. Silver's main usage is for real utility like manufacturing, industrial processes. It's not scarce at all. And then gold is just, it's manipulated. The whole gold and silver markets are heavily manipulated. JP Morgan has a bunch of shorts on it. The whole price is manipulated. So I don't really trust it, which is why Bitcoin, you cannot manipulate it because it's all on chain. People can just say, I'll take delivery of my Bitcoin right now, please. And you better have it. So everybody needs to watch their liquidity. Hi, TechLead, I have 95% BTC. Should I move the 5% into Sol now or after we pump a bit? Or ETH? ETH is going to zero. ETH is going to zero, guys. It's already on its way there now. I don't think ETH is going to recover. If you take a look at ETH on the long-term trend, it was already headed to zero for a long time. Tom Lee and his funny little DAT treasury company gave it a little bit of a dead cat bounce, and that was fun. But the original trend has always sort of been this undercurrent of Bitcoin. And perp season is essentially going to wipe out DeFi 2.0. In my personal opinion. The whole entire DeFi 2.0, Ethereum gas token, Uniswap, SushiSwap, L1, L2 gas tokens, all of that stuff, that's DeFi 2.0. I think it's done. And Perps DEX era does mark the end of Ethereum. And the next stage is going to be just all of these gasless Perps frameworks. It's just better. You can tokenize any sort of asset you want. If you want to trade stocks, if you want to trade private equity like SpaceX stock or OpenAI stock, you can do it on the Perps frameworks. You can trade anything on Perps with leverage. Who wants to trade on Uniswap without leverage? You're at 1x leverage. Everybody wants some leverage. This is the degen world. These are traders. Plus, it's more secure. You're not going to get your wallet drained. You know what I would do? Take that 5%, put it into BTC, and then take out the collateralized loan and buy some more BTC. Now, you just want to make sure you don't get yourself liquidated if BTC drops too much, which I don't think it will. I think it's this gradually then suddenly thing. The dollar strengthens, it's going to strengthen for a bit, but nobody believes that. The economy is weak. The rates are too high. If the rates keep going up, our debt interests just continue to pile up, and Besant is absolutely desperate to get these rates lowered in order to just get our debt under control. This was the year where we were supposed to get the whole debt under control, right? Doge is supposed to cut $1 trillion. Obviously, it didn't work. The tariffs were going to bring in the other $1 trillion. So now we have $2 trillion coming in per year. And our deficit, I believe, is about $2 trillion. So then we would have a balanced budget. Whole thing is off the rails. And plus, the interest payments are just skyrocketing now. If you were to tell me to try and beat Bitcoin, I don't think I could do it. And I don't think any of these tech companies can beat Bitcoin either. The AI thing certainly can't beat Bitcoin. If you're smart, like if you're a Google or Apple, you need to build out your own wallet, right? So the smartest thing for Google to do now would be to build out a Google Pay wallet, stablecoin wallet. I think PayPal is kind of working on this type of idea. Build out a stablecoin wallet, onboard the world onto it, connect it to your own blockchain, Google Cloud blockchain or whatever. And then you basically own the whole entire Web3 financial layer of the internet. You own that whole ecosystem. And then you block people from using, you don't block people, but you just make it very difficult for people to use a competitor's blockchain, right? Like Google's not going to want people using Base. Base is not going to want people using Binance. Let's take a look at Aster. The reason I'm kind of bullish on Aster is if you take a look at the perps volume, 35 billion compared to 10 billion for Hyperliquid. So it is over 3 times the perps volume for Hyperliquid. Take a look at the fees. Aster got 15 million in fees just yesterday compared to Hyperliquid at 3.5 million. It's like 4 times the number of fees. If they wanted to, they could take the fees and just buy back the Aster token or just burn some of the tokens if they wanted to. Look at this TVL. This is the TVL. How come North Korea has the best hackers? Well, they're probably pretty smart. Those Asians, they're smart. Plus, they're just massively incentivized too. It's kind of like how the Russians win all of the programming competitions, and the reason is because when they win, same with like China, the government actually rewards them and recognizes them and gives them like a job guaranteed, 100K funding. The US doesn't give you anything if you hack something. They're just like, okay, we'll just put you in prison. This is the TVL for Aster, just skyrocketed. This is going to be an interesting one to check if they continue to shoot up or not. If it continues to go up, if CZ is also very aggressive with this, Aster could flip Hyperliquid. Because think about it, if we're taking a look at distribution, Binance can easily push Aster to all of their users. Binance is the #1 DEX. And the key breakthrough that I mentioned for Aster is available in the US. Hyperliquid is not. You go to Hyperliquid, it's all region locked. So the largest capital pool in the world, it's the #1 market you must win. You have to win it. You come to Aster, it works in the US. And in addition, you can come in over here and you can trade stocks. You can't trade stocks on Hyperliquid. So if CZ is saying, okay, he wanted to build Binance for the US, but the US said, no, we're going to put you in prison instead. Okay. And then maybe he learned he needs plausible deniability. Just do it on decentralized exchange, right? Like Uniswap is totally okay. How come the Uniswap guys didn't get put in prison, whereas he did? Oh, okay. Let's just do it as a decentralized exchange thing. So we'll have a decentralized front end, and on the back end, maybe they just hook into the whole Binance liquidity. If they were smart, that's what they would do. And they would capture the US. If Aster wins the US markets, it's game over for Hyperliquid, isn't it? I covered this the other day, but Vitalik had this very misleading post where he was talking about how L2s are basically, they benefit from Ethereum security, like base benefits, because you can just at any time, even if the L2 goes down, you can just take the token on the L2 and force it to bridge over back to the L1 and just take control of your assets even if the L2 goes down. That's not true, because every token is issued natively on the L2. There's no L1 counterpart. If the L2 goes down, you lose the token. Vitalik's just coping. He's pumping his bags. He's just pumping his own bags. How did I, as an engineer, become so knowledgeable about the intricacies of financial markets? I'm just smart, you guys. It's an overabundance of time. Everybody's out there doing their cubicle job, pretending to be productive, busy for nothing. And then other people like me are sitting around learning tax optimization. I got into day trading a while back. I mean, look, I was a millionaire at age 25. So after that, I was like, okay, how do I do tax optimization, capital allocation? I learned day trading. I spent a whole year day trading, lost $300,000 messing around with commodities, trading oil, agriculture, messing around with gold commodities, silver, stock options, call options, put options, spreads. Then I was pretty early into crypto. So, I mean, people think I'm dumb. They think I'm just some dumb YouTuber. People have no idea. What's my opinion on short trading, like leverage trading with BTC? You need to be careful about the funding rate. You know about that, right? The funding rate will get you. A lot of people, they end up going to Hyperliquid and they come and say, okay, let me just buy the ASTER Perps on here. But the funding rate will slaughter you basically if you check this. You know, ASTER's funding rate on the Hyperliquid is 250%. That's per year that you're paying. If you take a long position of ASTER, let's say you do a 4x leverage position on ASTER, you're paying 1,000% APY on ASTER over a year. If you're smart, I think what you could do, and what I've considered doing, is you arbitrage the funding rate. So this is what this page is showing you. They're saying like, okay, look, you can take a long on Hyperliquid or take a short, and then on Binance, you can take a long. Go delta neutral, and then you can arbitrage some funding rate. So they're showing you like some of these, you can get like a free 18%, free 25% on Doge here. Is this worth learning Solana Web3 development or SUI, or is it all a waste of time at this stage? You know, I think anytime you ask, is it worth doing something? A lot of the people are looking for an easy out. They're looking for me to say, no, it's not worth it. So they can say, oh, phew, I don't have to do the work. That's what I think about when people ask me if it's worth doing the master's program or going to college. It's like, well, for those, try it. And if you get something good, you should do it. I would not learn technology or coding for the sake of it. I don't just sit around thinking, let me learn Rust. Let me learn 5 different languages. It's usually you have an idea, acquire the tools that you need for the idea. Right, so come up with a project first, I would say, and then build around that. Or I think you could get some pretty decent jobs actually as a Web3 engineer. The competition is probably way better compared to Web 2 stack. If you go in and you say you just know Python or Java, I mean, then you're competing with all the H1B engineers. I'll tell you something. The reason I got a job at Google was because I priced out the H1B engineers. How? I learned iOS. iOS coding, what do you need? You need a Mac and you need an iPhone. The H1Bs are too cheap for that. They all do Java. They're all on their Chromebooks, their Android phones, so they're all Java Android programmers. All the iOS programmers are like Americans or Westerners. The H1Bs are too poor for that. That's the secret for that. You gotta get into a field where you price everybody out. So similarly with, say, blockchain development, it costs money. I mean, when I was building my Web3 apps, it cost maybe even $1,000. I mean, I built a crypto arbitrage trading bot, cost probably $5,000 just in bugs. I mean, who works on testnet? You just gotta do it live, and then your bot's doing whatever, and you make bad transfers, you got bugs in there, and you just lose funds, and you just have to have some funds ready to lose. All right, this was kind of just the last fun story for the day, which is Elon Musk's xAI is now suing OpenAI, alleging theft of trade secrets. So this lawsuit was filed just today. It is an absolutely hilarious one because all of these xAI employees are just uploading the full xAI source code. There's a number of these people who are just taking all of xAI secrets and taking them over to OpenAI. I think it is ridiculous if he's saying, okay, people aren't downloading my app because Apple is restricting the distribution, so I need to sue Apple to get people to download my app. Well, if AI is really so groundbreaking, if it's such a game changer that nations are going to go over war to get their hands on this thing, then Apple's not going to be able to stop people from downloading it. It's like everybody's going to want it. If you're suing each other because it's so commoditized and there's no distinguishing feature between one or the other. OpenAI's product is basically the same as your product. It's all kind of the same thing. They're interchangeable. And you got to sue each other just to like edge out a little bit. It's commoditized at that point. So they're saying like this one guy, he in a handwritten confession admitted to taking the source code. He was communicating with the OpenAI research talent advisor Tifa Chen over Signal, sending information for the entire source code base. And then the OpenAI recruiter 4 hours later expressed in disbelief, sending a signal, no way, we got the source code for the whole entire xAI stuff. At the same time this was happening, X was offering this guy millions of dollars. Maybe you should learn AI, guys. And at the same time, OpenAI was offering him a job offer. And the funny thing is, at first they rejected him until he gave them the source code. And then they're like, okay, now we'll hire you. This isn't even the main case. There was another guy here, they mentioned Jimmy Frazier, joined xAI, stole extensive infrastructure and training code. They say here, the secret sauce of xAI is the data center team. Their speed and precision blew me away. I would never want to compete with them. But the dangerous thing about this is that OpenAI has all of xAI's secrets now, one way or another, lawsuit or not. The secret sauce is leaked. I mean, in addition, the whole entire landscape is very competitive. The whole thing is commoditized. Look, I would prefer you just show me the AGI. If you've got the AGI, give me that. I don't care about you suing Apple or OpenAI over like the small little model thing. If you've got the AI, show it. Let's see the walking, talking dog and the walking, talking robots. That's how you prove yourself. But same with Meta. If you've just got these people going around saying, well, we don't know what to do with the product, go vibe code it. Go learn vibe coding, and then you take this useless thing that we have no idea what to do with, and you figure out what it's good for. Because we certainly do. We're just going to sell it to you on the subscription package, and then you go figure out what to do with this thing. Because we don't know. We can't build anything good with it. If we could actually build something good with it, we wouldn't release it to the public. And at the end of the day, you've also got the massive giant Google with their built-in integration with Chrome. And I think Chrome is just massive. Like the browser integration is massive because if you think about it, 90% of your actual usage is like your web usage, your computer usage is in the browser. Whoever owns the browser, they own the data, they know what you're doing. And if you can build AI into the browser, you've got the distribution. Maybe XAI should not worry so much about OpenAI, they need to worry about Google. All right, guys, so that really wraps it up for today. Hope you guys enjoyed the episode. Nice chatting with you. Let's hope the markets recover. I do think at some point after altcoin season, we see a rotation back to Bitcoin. Do I go to the gym? Absolutely. I go every day. 45 minutes. Everybody should get their exercise in. Health is wealth. All right. Have a great day, guys. See you next one.